Wall Street fluctuated sharply in early trading Tuesday, a day after the Dow Jones Index fell to its lowest level in 4 years. World markets posted mixed results. Some European stocks rose as much as 2% Tuesday, while a key index in Japan plunged 3%. Speaking in Washington, Federal Reserve Chairman Ben Bernanke said signs indicate U.S. economic growth is likely to remain subdued for the rest of the year.
Overall, the combination of the incoming data and recent financial developments suggests that the outlook for economic growth has worsened and that the downside risks to growth have increased. In light of these developments, the Federal Reserve will need to consider whether the current stance of policy remains appropriate.
Analysts say the Fed's gloomy assessment opens the door for a possible rate cut when the central bank meets again later this month. In the meantime, the Fed has announced plans to buy up massive amounts of short-term debt. Analysts say the plan to buy up commercial paper, as they're known, should make it easier for companies to obtain short-term loans. Financial strategist Howard Wielden.
The solution has to be moves to get banks trusting banks, liquidity, not just liquidity from central banks, but movement of funds between banks.
Despite the Federal Reserve's efforts to inject confidence into credit markets, Wall Street sank further on Tuesday. The Dow closed more than 500 points lower. Finance worker Charles Small blames fear.
I really think people are reacting emotionally rather than logically. I think, as FDR said, you have nothing to fear but fear itself. There used to be irrational exuberance, as Greenspan said, and now it's gone the other way.
Meanwhile, the Bush administration says it's moving quickly to implement the $700 billion economic rescue plan approved by Congress last week. President Bush assured a meeting of small business owners in Virginia that the U.S. will survive the latest financial crisis and emerge stronger. Arcega, VOA News.